I need you to close your eyes and I need you to picture this, okay?
Oh,
Okay. His father makes color televisions and he wants to set up his business in the same space. Guess that guy stands out right now. And they were the first to bring a colored, Indian made colored television to the masses. You're creating the design from scratch, so there is a patent involved, there is thought involved.
but the game changer for them was the mobile phone division for them.
30-year-old business managed to make one of the largest manufacturers of electronic products, not just in the country, but among the standings in the world. We are talking about none other than. Hello and welcome back to the podcast this week. My name is Ayush. We
And
have.
I'm Prateek.
Before we begin this week's topic, let's just point out the fact that we're twinning. We're wearing the color green, which is
Oh yes.
supposedly
Is it green or
signifying.
is it brown?
I think it's a little mix of
Yeah.
olive, forest green बोल सकते हैं. But yeah, we're twinning. This week's talk is very interesting. But before all of that, we fail to mention this a lot of times because we fail to mention what we do in the first place. But for all those who are unaware of what we do, we basically research stocks. We invest them on behalf of people who aren't as aware as we might be, and we make that information very easily palatable, accessible. So if you think that you need a service like that, then the link in the description below will give you a free portfolio review. Check that out, see if you like what you're seeing, and if you want to change things up about how you invest your money, contact us. Let's start with this week's talk by setting a little bit of a storyline for you. Okay, I need you to close your eyes and I need you to picture this. Okay,
Oh.
okay, 1993 India. Okay,
Hmm.
this is 2 years after India has finally liberalized. Okay, so it's open to the world for economy. And this young little 23-year-old boy who's come from doing his masters in London, he's come back to his father's business in Noida, Delhi, somewhere around that region. His father makes color televisions, and he wants to set up his business in the same space. The only difference being, for the first time in India ever, someone wanted to make TVs for someone else.
So basically contract manufacturing.
Exactly,
Okay.
contract manufacturing. So it was a very unheard of concept, very new to India, very foreign, as quite literally. And that little boy started with 15 lakhs that he borrowed from his father because the father was already an established businessman. He had a 10,000 square feet space in Noida that he rented out. And he had about, what, 15 employees that he gathered from his father's business again. So he's completely utilized Purna Istemal of his dad. But from that humble beginning, guess what that guy stands at right now?
Listed company, I think, must have crossed 1,000, 2,000, 3,000, 400,000 crores for sure.
Absolutely. And that man himself, that 23-year-old boy who's now 50s, is one of the Forbes billionaires on the list at a net
Crazy.
worth of more than $1.5 billion dollars now.
That's really good. I mean, किया तो सही use बाप का, but then
He did his
for
own
a good
thing,
cause.
absolutely,
Yeah.
for a great cause. Let's compare those numbers. 15 lakhs he started. The company makes 375 crores in profits
Crazy.
as of last year. They have 22,000 employees across the country and in China and a couple of Southeast Asian countries that they operate in. And they have 23 plants, and the average size of each is 20,000 square feet now. And they have a huge plant coming out now, which is even larger.
Even larger.
The stock, on the other hand, has given a whopping 26 times return since its IPO in 2017.
It IPO'd in
Yeah,
2017, and I
IPO in
think
2017
in
at around
8 years it has given.
550 rupees.
Oh,
It's at more than 15,000 rupees right now.
that is also after a split or a bonus,
I
right?
believe
But
so. So
yeah,
all of that
yeah,
count karke, this man has managed to create a 30-year-old business. That's very less for India's
yeah.
heritage. 30-year-old business managed to make one of the largest manufacturers of electronic products, not just in the country, but among the standings in the world. We are talking about none other than Dixon
Dixon
Technologies.
Technologies.
Brilliant company. Have you, have you heard of the company? Do you know anything before we give the audience context as well?
Like, to be honest, as far as I know, कि हाँ same contract manufacturing करते हैं. They're not now just not limited to TVs,
Right,
but home appliances हो गए. They're even
correct,
into mobile phones now. So
right.
basically, they
In fact,
bring,
that's the biggest
yeah.
part about what they do.
So basically, they get all the raw materials or the parts required. They assemble them, and some parts they might be manufacturing in-house, but yeah, majority they still bring out from different countries, assemble and then sell it back. Yeah. This is
Absolutely.
what they do, as far as I know.
Very true.
Yeah.
But I think the entire storyline and the narrative behind this Dixon is quite relevant because we don't see a lot of these stories anymore, and it's very difficult. I mean, not that difficult for us because we watch stocks a lot, but very difficult for the audience to see these kind of stories pan out. So we're just going to give you a quick, brief view on how they started back in 1993, and now as of 2024, what kind of a mammoth it's become. Just to give you context, the father and the son duo that we're talking about is Sundar Vachani, the father, and Sachin Vachani. Am I right?
Sunil, I think.
Sunil Vachani?
No, it's
Yes,
the other
Sunil
way around.
Vachani and
Yeah.
Sundar Vachani
Sundar
is the
is
dad.
the
Dad.
dad
And
and
Sunil
Sunil is the
Vachani is
son.
the
Yeah.
son. Right. Now, Sunil Vachani started this business in 1993. Now, Sundar Vachani had started a business 10 years before that called Weston. And they were the first to bring a colored, Indian made colored television to the masses.
So basically already color television tha, but Indian made nahi tha.
Correct.
And this guy brought in
Correct.
color
So
made
that
Indian
time the
television.
most famous brand was Gold Star, which is LG, basically.
Hmm.
That's what they're called now. It was called Lucky Gold Star back then, and they were the first to bring the color television to India. Western used that technology, made an Indian-made version. So that like finesse, that practice of manufacturing in India at scale is something that I think Sunil has received in Virasat in some way because he learned at the Western factory before 1993 for about 2 years about how to manufacture TVs the best and most efficient way possible. And then he started the company in 93. And I think their first ever client again was LG because they were finding it very expensive to manufacture, then import it to India, sell it here, and the price point just wasn't making any sense. So what they did was, and the way Dixon attracted them was they said, ki, okay, we are going to charge you a flat fee of $1.5 per TV that we manufacture. We have the capacity to make 5,000 televisions a month. LG was floored there itself, and they immediately became, I think that's their longest standing client, where as of today, they make almost all of LG's
LG's
products that you
TV.
see in India at least. So if you have an LG product, it's most likely that Dixon Technologies has made it. So $1.5 flat per television. That time, the television used to sell for $1,200. So that's less than 1% of a margin. But they made 3 lakhs of profits in the first year, and I think there's no stopping from there. And in the first 8 or 9 years, they just made color televisions of different varieties. But they stuck to that one thing, and they tried to decide what their vision would be. In the middle, they wavered a little bit because they went away from their vision of manufacturing for others to manufacturing for themselves for about 1 2 years, and then they realized that there's no point in deviating from their initial mission.
Yeah, but then it's true, right? Because if you are becoming an EMS player, you shouldn't be entering your competitors, yeah,
Exactly. That's the entire point.
competitors'
I think
place.
it's a quote from what Sunil Vachani said in one of the interviews that we promise that we will never compete with our own customers. And that's something that they've stayed on till date. So the last 30 years, except for that 1 2 year gap, that's all they did. Cut to the early 2000s. Now that's when, at this point, they had clients like LG, Sony, Philips, and they were making only TVs back then. But then in 2008, this is when the LCD technology started becoming famous, and the Tamil Nadu government basically gave Dixon Technologies an order to make 2.5 million TVs under some kind of scheme that the Tamil government was doing at the time. So they wanted to give that TV for a very subsidized cost to its people, but that doesn't mean Dixon had to sell it at one. But again, huge order, and Dixon was incapable of doing it to the point that if they had to satisfy that order, they'd have to scale up capacity by 10 times, and they had no time to do it. So all they needed was basically immediate money. Now, Dixon is known for being a very, very anti-debt. Like their debt to equity is zero point 0.1. Debt to equity is basically how much debt you have versus how much shareholder equity. If it's lower, it's better for most cases. So they have a zero point 0.1 debt to equity. They intended to keep it that way, and that's when a very famous entity that we know called Motilal Oswal caught Dixon, and they said, Ki, listen, we want to invest in you. We want to be there. We want to guide you. We want to hold your hand because we think that while you're doing great, you can do greater. So at 150 crore valuation, Motilal invested a certain X amount of money. And not only did they help them finish that order of 2.5 million TVs, but they initially went on to diversify their product portfolio to make other home appliances. So they went from making just TVs to making washing machines. I mean, eventually they go to see that they made refrigerators, IT hardware like laptops.
So basically everything from TV to home appliances to all the electronics we
Lighting,
can imagine, lighting solutions,
exactly,
everything.
exactly. So anything that a home could use in terms of an appliance, like an electronic.
Also, just a question.
Yeah.
So, were these just OEMs? OEM model, basically the design is given by the customer and they used to manufacture it, or does Dixon also operate to the ODM model?
So great question. Now that you've already explained the difference, initially till 2008 they were just OEMs, so there was no thought in terms of what the design was. They just manufactured and shipped. But when they entered the lighting segment, where it was just like LED bulbs and stuff like that, they decided that they would rather set themselves apart, and then they designed it themselves as well. And then they sold it as a white labeled product to another brand. That could be anyone from Havells to Philips, as we already mentioned. So yes, most of their portfolio is OEM. And now again, for the viewers, as we already know, OEMs have a lower margin profile because at the end of the day, you're just manufacturing at scale, right? There's no actual value addition except for the fact that you're efficiently manufacturing
It's
things.
this whole EMS thing is of scale only, right? You
Absolutely.
only earn as and when you grow. That's it. Yeah, because the
Correct.
very thin margins, I think 1 or 2%.
Yeah, I mean less than five
Yeah.
for sure, less than five. And again, that's something that we will also encounter later. But ODMs, what you mentioned, they are a little higher margin because at the end of the day, you're creating the design from scratch. So there is a patent involved, there is thought involved, hence there's value involved. So you can charge a premium. But yeah, they went from doing just TVs to all of these things, where at one point, I mean, even now, they make Panasonic, HP, and Godrej almost all the products in-house in India. So that's a brilliant feat. I mean, they're known as the poster child for the Indian manufacturing dream even before Make in India became as famous a concept. And then when Make in India hit, that's when Chandi, because we know of a scheme called productivity linked incentives. Can you give us a little bit of a explainer or a brief?
Yeah, so basically this scheme I think was brought post-COVID, right, by the
Yeah,
government. So what
I mean, a little around that
Yeah, so
space. Yeah,
what really happens is, so for example, like, we mentioned there was this boom of manufacturing happening, and we still used to import a lot of stuff out from countries like China, for example. So to curb that particular import and to, increase manufacturing in India itself, government started providing incentives. So if invest X amount or and you make Y amount of sales. So based on that, the government will give you incentives.
correct.
And basically this whole reward system, helped companies like Dixon, to capitalize on these opportunities given by the government. And they might have put in X amount of money and then they used to get that reward back, so it helped companies like Dixon and all the other small companies, to put in plans to increase the manufacturing. So basically, yeah, this is the PLI scheme.
Absolutely. I mean, that's perfect. That's the only description we could give. But if I had to just give you numbers to what exactly the XY that you said, for a domestic company, the requirement was very low. It was like a 5 crore investment and maybe 100 crores in sales, and you will get a 1 to 4% incentive on every additional unit you sell. So, for example, if you've sold 100 units in year one and you sold 120 in year two, on the 20 extra units that you sold, you'll get a 4% of
4%.
that money back. So the only way to make money using the PLI scheme,
Basically, PLI is a cashback.
exactly, it is a passback scheme by the government, honestly. But इसमें
Yeah.
effort ज़्यादा जा रहा
Hmm.
है because to get the benefit PLI scheme say you have to manufacture at such a large scale and so many units that there's no other way to make money. And for the global competitors, because they just wanted money in, the investment criteria was 250 crores of investment, and I think about sorry, yeah, and 4,000 crores in revenue. And guess where Dixon falls into?
Dixon, obviously, I think being domestic, they might have gotten a better advantage than the global peers. And I'm sure, huh, because what had happened was even before, even I got to know about Dixon after this PLI scheme.
Exactly,
I'm sure they might have as a capitalized on this particular opportunity, take them as a full gungo, might have gone in this on
exactly.
this. So
And
yeah.
they fell, in fact, in that global criteria and surpassed it. So
Oh,
when they said, now let's just check the numbers again, they made sales of about 6,400 crores. A year after PLI, they make 11,000 crores in revenue. Highest ever single year growth that they've seen in at least in that 5 7 year period because they
basically, yeah,
had an
85,
incentive.
90% jump.
Exactly. And because of that, like 70 whatever percent jump, they made about 70 crores in incentive back from the government. So seems like a small amount, but I think later when we see how much of the PLI scheme they juice out, that's when you see the money being made. But Yeah, that's the story of Dixon. And cut to 2025, they make 35% of all LED TVs in the country. They make 30% of all smartphones in the country, and they're the largest producers of LED lighting. I mean, you'd think Havells would be the largest, but then in terms of actual EMS manufacturing, just manufacturing, their scale
Dixon is the
supersedes.
largest.
It's insane. So yeah, that's the story. Now, would you like to condense the narrative and tell us just like 3 points as to why they did so well?
Fair enough. So, as you mentioned again, कि हाँ PLI था सब हुआ. So again, coming back to that, as we talked about, कि there was a sudden revenue jump because of this PLI scheme. So, and this also happened because once Dixon shifted from TVs, right, and then they shifted to lighting products. But the game changer for them was the mobile phone division for them, which I think because of that that particular division, they recorded a 50% jump in the revenues in FY24 to 18,000 crores.
Wow,
So basically, I think they were at around 11,000, 12,000 crores, and then
correct.
वहाँ से they jumped to 18,000 crores. And 40 to 50% of the revenues come from the mobile phone division.
That
And
was in a single year it
yeah,
came up
in a
with that
single
much
year.
revenue,
And the reason behind that also is Dixon already started making partnerships with companies like, Xiaomi, Samsung, and Motorola.
Yeah,
And India being a mass market, Xiaomi, Motorola
does very well.
works well, and Samsung ke lower end models, a lot of people still have used those models.
Correct.
So yeah, that is why there was this first point is explosive revenue growth. Second is the scale and efficiency, which we talked about, that, Dixon has, I think, around 23 plants nationwide, yeah, across the world, not just India, Southeast Asia, China, everywhere.
Right.
And because of that, they are able to manufacture, I think, around 11 million smartphones and 26 million feature phones. And that is also in the first 9 months of FY24.
Wow.
So I mean, now with increasing scale and increasing efficiency, I'm sure they're going to more than double this number in the coming years. And they have now become a trusted partner of all these brands, because इसमें trust भी बैठता है,
Correct.
because you can't mess up in the manufacturing, because one lot goes wrong and
Game
you
over.
lose your reputation.
In fact, to add a little bit to what you said they make about 11 million smartphones and 26 million feature phones. Now, in general, in the last 3 to 4 years, we've seen that the number of smartphones being consumed in India is around the range of 140, 160 million.
Hmm.
So they make 10% of that when they started.
Started, huh?
Now they make 30% of it because they're set to make 30 million smartphones this year when the FY25 result comes out. So in the span of 2, 3 years, they've scaled up manufacturing so quickly and at a very efficient pace, which we will also see in numbers, that it's insane that why this narrative wouldn't work out for them anyway.
So yeah, I think that was there. And the third, the major thing which helped them was the policy tailwinds by the country. So this whole particular industry was, getting a boost from the government itself. And when there's support from the government, it really helps the companies in this particular sector. So I think what had happened was, so Dixon, capitalized on the PLI scheme, and they earned themselves I think 14 to 15% of the incentives in the whole scheme was earned by
Wow.
Dixon. So I think what around 1,000 crores plus of incentives they have earned till
Exactly.
now. Yeah,
Correct.
I think as of FY25, ending of FY25.
Right.
That is,
In just in
yeah,
FY25,
just
they've
in
made
FY25,
1,000
sorry,
crores.
yeah.
It's insane.
So that is there. And because of this and getting export and domestic contracts, the stock price, hence the run in a stock price. I think 160 to 170% jump in just a single year for this
Right.
particular stock.
I
So yeah,
mean,
these are
that's
the
brilliant.
reasons why this stock is, now in everyone's radar, has already been in everyone's radar, but has shown us this humongous rally. But apart from that, I think they also have that ability of forming partnerships, like as we discussed, they are already in touch with Xiaomi, Samsung, Motorola. What they also did was they acquired this one company called Isma 2. So they are a manufacturer of mobile headset.
Got it.
So they made a JV with them. And what's interesting is they made a JV with Airtel also, that they'll manufacture telecom products for the Airtel customers. So, forming these partnerships has also helped Dixon, scale massively in the recent years.
So what they've done is they've simultaneously onboarded someone who's good at making mobile phones and gotten a contract to make mobile phones for someone else,
Yes.
use their own efficiency scale, and then just like made this entire value chain, which is brilliant to think about. Like, I don't know where Vachani got this kind of, I mean, we know where it's come from. It's come from years of hard work. But it's brilliant that they're able to become amongst the largest EMS manufacturers in the world, essentially. But,
Yeah,
and
I
I
was
think this
just
is,
going to ask you
there is a
this.
but
Yeah,
always,
this is what has happened till now. But what is there in the future for this company? Do you
right?
still think there is some narrative left, or some, some the company will again show us this humongous growth which they've shown us, or what's the scene?
So I think in every narrative, I mean, here we've identified that Dixon and Bachani are the heroes, and the supporting character was our government and the fact that Indians are huge smartphone consumers and just electronic consumers in general. But the villain in this case is a couple of things actually. It's timing, it's valuations, it's how the financing works. It's a multiple things. So let's go about a few of them. I think one of the main things that you mentioned before was the fact that net profit margins are at around, or EBITDA margins are at around 5%. That's low. I mean, that's
Very
incredibly low. That's
low.
incredibly low. At a, let's just do context setting again. They made 80,000 crores in revenue and they made 375 crores in profit. I mean, where is the money going, right? But it's going because this is kind of like a very expensive,
Capital
capital
intensive, yeah.
intensive, exactly, capital intensive space. So you're bound to make nothing on all of this, and you have to achieve scale to make any money. And that's what they've done. But again, something that you mentioned earlier was the PLI scheme being one of the major triggers for them. So it was like a climax point for their journey also in the story. But it could just be the villain because this particular PLI scheme that they were a part of, that they made 1/7 or 14-15% of, that PLI scheme ends in March 2026. Now, there's always scope for those contracts being renewed by the government, putting more funds into making India the largest consumer of electronics
But
ever.
then again, that's the thing, right? These schemes I think will be, once in a time kind of a thing, and because they just want the Indian manufacturers to become self-sufficient in,
Correct.
manufacturing. So I don't think they can bring this again and again.
Which is the fear
Yeah.
that most people, not just investors, but the people who are in the business feel that Dixon, or at least that's the rumor, that Dixon just did well because of the tailwind from the policy. But is yet to be seen whether that's the case or whether they're standalone, just brilliant entities. But that's one issue because just because of the PLI, they made a 5x growth in revenue and profits in the 3 years post. Now, whether that growth continues because it's enormous growth, they're expecting FY25 results. I mean, this is not an estimate or anything like that, but they're expecting revenues to at least double from 18,000 crores to what they're expecting 36,000 plus crores this year. They've already made 33,000 crores in 9 months, so it's a no-brainer. But yeah, I mean, this is just like a pros and cons of the company. But secondly, now we haven't really mentioned the fact that exports exist, right? And the largest exporters of smartphones in India are Tata Electronics and Samsung. So they manufacture here, ship it out because it's cheap. And Dixon's not been able to crack that market yet. So to put context, last year or just in the last 10, 12 months, we have shipped out $17 billion worth of smartphones from India to the rest of the world. Dixon makes up only 2% of that,
Even at this scale and
even at
this
this
level
scale.
of sale.
So there must be something wrong going in why they're only considered make in India, made for India only, consumption wise. Like they're treated as an import substitution rather than something that India should be proud of and shipping out more, which will hopefully change. But as of now, that's definitely a red flag of sorts that we have to look into, or the company has to look into.
A red flag, or maybe a trigger for someone who's, now looking into the stock. Ki, haan,
Exactly.
export, if they crack, then again this could run up.
There's more value
Yeah.
unlocking, absolutely. But talking about value, now this is where it gets a little creepy because at the end of the day, this stock is priced at 15,300 rupees. I mean, there's not a lot of people who can invest a lot of money into this company. And you see that in the volumes as people trade this stock as well. But in terms of valuations, according to the market, on a 1 year forward earnings basis, it trades at an 85 times multiple price to earnings. Its peers trade at 30 times. So peers are Sirma, Keynes
Gains,
Technologies,
Amber.
exactly. And even the global entities that have set up your Foxconn and stuff like that. So they aren't trading at those multiples also because Dixon's a massive entity and they've been around for 30 years. So they demand that kind of premium of being Dixon Technologies.
But then when you compare it with the global players, Dixon is still a very small
Oh,
entity, right?
tiny,
Yeah,
tiny,
yeah, yeah.
minuscule. In fact, that's great that you bring that segue because we everyone calls Dixon Technologies the Foxconn of India. But in terms of sales, Dixon is 1% of Foxconn.
So maybe I think that is why Dixon is still trading at, such valuations. People might be thinking, it can be the next Foxconn. And now Foxconn, I think, has matured enough to be at that particular level. Hence, they get such valuations. And that is why Dixon right now might be getting such valuations.
Correct, and that's pretty sure what it
Yeah.
is. But let's just compare that as well. Why Dixon again? I mean, this is my bias probably, but why Dixon does better even than these big players? Because if you look at just two metrics that most operational intensive companies look at, which is your operating margins and your capital employed return. So how much money you're putting versus how much money you're getting out of it. With Dixon, well, with Foxconn, their operating margins are at around 2.73%, and their return on capital employed is 7.5%. Dixon is at 4.5% operating margins and incredible 30% return on capital employed. I don't know how they're doing it. So another thing, so Sunil Vachani partnered with this man called Lal, who was sort of like an apprentice of Sundar Vachani. And when Sunil Vachani came to Sundar as like Papa mujhe business karna hai essentially, and he just came as a young 23-year-old boy, just come with a master's degree, no experience whatsoever except for seeing his father do the business. But Lal was someone who knew everything through and through and was a incredibly acute numbers guy. So what that man has done over the last 30 years is you go to any employee in Dixon Technologies, whatever department they may be in, the one thing that they know is numbers. Everyone is so hardwired to think about operational efficiency and financial efficiency that there is no way that everyone's not on the same page, and that's why they're able to return the capital so well.
But yeah, that is still, we just talked about valuations, everything, being expensive. But any, if you could indicate about what are the future plans of the company,
Right,
or is there anything which people who are interested in Dixon should look out for as of
correct.
now?
Right. So initially, I mean, they're still going very hard on the smartphone play. It makes up for about 85% of revenues as opposed to the 40-45% number that you had stated when they initially started. So clearly they have a dependence. It's not very healthy, but if they're so gung-ho about it, there has to be some kind of confidence behind that. So what they're doing now is, now that they've got so many product offerings, what they want to do is they want to go back on the value chain. So the first point that you mentioned, where they get parts from somewhere else and then they assemble it and then they ship it. Now they're going to make the parts as well. And one of the most important parts in any electronic or most electronics is the display. So display fabrication or the display makes up for about 70% of the cost of the entire product. So as of now, they are at those single digit margins because they've had to buy these things from someone else. If you manufacture it in-house and at the scale that they're thinking of manufacturing it, there's no reason why these 5% margins could double in the next whatever years it takes for them to reach that kind of scale. And knowing them, it shouldn't take more than a decade, which is not a very short term plan कि अभी अभी डिक्सन खरीद लो 10 साल के लिए होल्ड करो फिर तो चांदी. But that's not something you can expect.
Yeah,
But it's definitely a trigger because this is great in terms of cost saving. It's great for their margins. It's great for the fact that if someone else reaches out to them to manufacture fabrication of these displays, because it's essentially coming under semiconductors, right? And that's like the buzzword of India,
yeah.
Taiwan, everywhere. And again, another policy tailwind that Dixon has conveniently caught itself into is the India Semiconductor Mission 2.0. So that's about a 25,000 crore dispersal that they're planning on doing. And if Dixon becoming that, I mean, being that poster child of PLI already, there's no reason why the IMS2 won't take them on board. And they're expecting to get a huge chunk of that 25,000 crore. And what they intend to do with that is make a $3 billion plant to make all of this. And it goes on acres. I think it's somewhere in the south of India, but I'm not very sure about that. But
I
the
think it might be
scale,
Tamil Nadu as far as I know.
very possible.
Because considering their past relationship with the Tamil Nadu government,
Exactly, yeah.
I
It's
think they
very
might
possible.
be,
That's a good deduction to make.
yeah.
But yeah, so they're fixing the problem of their financial difficulties. They're fixing the problem of the fact that, okay, they are too highly relied on one product. So what can we do? We'll make other components and make that our entire business. So they're going to go completely backwards in the chain. They'll make sure that they make everything from scratch, and eventually they're going to become. I mean, it's no. there's no contest. They're going to become the largest EMS players in the world at some point, at least in the top five. Apart from that, the export thing that we mentioned, now they intend to start selling from FY26 onwards 3 million smartphones a year to the rest of the world. So that will make up about a little less than 2,000 crores in revenue. That's not a
Which
lot,
is still, I think, less than 10% of
less
their
than 10%.
revenues. But
Yeah,
yeah, a
it's a
key,
start.
it's a start, I mean, everything now depends on their execution for the future plans.
Absolutely. And the way Trump has been flinging around tariffs, I mean, everyone knows at this point that is either he's bluffing or it's not going to really detrimentally affect India as much as it may affect China, our neighbor. So either way, choosing India as or choosing Dixon as your manufacturing partner for any company that makes electronics, even anywhere in the world, seems like a good option.
Good option, yeah.
Like we saw that with Google Pixel, where they've completely offboarded, almost completely offboarded their production to India in Dixon, where about a certain X percentage, 10% is exported, and the rest is entirely given to consumer. And now chatter about, I mean, they already partnered with Tata in India, but they might partner with Dixon
But
because detrimental in China. So might just see a huge Apple factory coming in, headed by Dixon in India, and maybe the price of the iPhone might just get more affordable, hopefully more affordable.
and Dixon might just keep on getting expensive.
Absolutely. Imagine iPhone and Dixon ka cost share
So,
price will be the same, 70,000. I mean, hopefully, who knows? Who knows? But yeah, Dixon's definitely at that point in its story where anything is possible, both in a good way and in a bad way. It could be the end or the beginning of their end in their story, or it could be just another climax in their story waiting to happen. All we know is that history has shown that they're incredible at what they do. There's no contest to that. Every fact in this entire podcast will claim that. It's about how they adapt to the very new environment that they've plunged themselves into, and whether that works out benefit for them and whether the investors see that value or not.
yeah, I think we've completely
I
covered
think
the
we've covered
story.
everything.
Yeah,
That's pretty short, yeah. We're
yeah.
going to make concise podcasts going forward. But yeah, Dixon Technologies, please head to the podcast to read all of the data that we've collected. We've created a narrative, and that's essentially what we focus on here. We
And do
focus
check the
on
website also, right, for the blog.
absolutely,
Yeah.
absolutely. We post all of our content there, all of our narrative-based look on the stock market. And that's what we're good at. That's what we do. That's going to be there for you to view. And again, if you wish to look at your portfolio from our perspective for free, then do check out the link in the description and
Yes.
watch out for the next video. Thank you so much for watching. Stay tuned. Take care.
Yeah.
Good
And
night.
don't forget to like, share, and subscribe.
Yes,
Yeah.
please. Yes, please.